morning, everybody. My name is Matt Rosen. I'm the CEO of Fusion. I want to spend a few minutes today and tell you a little bit about where our business is today and where it's headed in the future. So to start off with, Fusion is a cloud services business. We target small, medium, and large businesses. Primarily, we target the middle market. So for us, the more complicated the business, the larger the business, the more we stand out and our value added increases dramatically. So as you look at the product portfolio that we provide, it's very important the approach that we've taken. Typically in the cloud services business, you'll find companies that have identified a particular product and sell that product into its customer base or prospective customer base. We, on the other hand, have actually targeted a solutions approach, which is a big differentiator in our business. And what that means is we've developed a suite of products and services that we believe form the foundation for any business seeking to access the cloud. The cloud, as we've all heard, is actually revolutionizing the way that software and infrastructure is delivered. The services that we have are all required if any company is looking to access the cloud. These services include cloud communications, which you've also heard as hosted voice over IP, or cloud voice as we call it, contact center services, unified communications. We have cloud connectivity, so we actually have a nationwide network that allows us to connect directly to our customers and allow them to utilize the network that we've developed and built nationwide. We have cloud security, cloud computing, as well as a host of other services that, as, again, companies look to access the cloud, we have what they need. The company today has a little over 11,000 business customers around the country. We have developed a proprietary platform, so that allows us to customize products and services for particular customers, as well as for particular verticals that we choose to concentrate. The business has had a fairly significant financial improvement over the last couple of years. In 2012, the company generated approximately $44 million of revenue, lost $3.5 million in EBITDA. Last year, we generated $61.5 million of revenue and generated $2.1 million positive EBITDA. And in the first 6 months of this year, we generated $46 million of revenue and over $6 million of positive EBITDA. So it puts us a little over a $90 million run rate in revenue and over a $12 million run rate in EBITDA. The business also has two core metrics that people utilize to identify the health of the customers. One is ARPU. That's the average revenue per user. Ours is about 470. That's approximately 40% above the average. That speaks to how much money our customers are spending on a monthly basis. And also churn. Our churn is actually less than 1%, which is also about 35 to 40% below the industry norm. We have a very, very good group of people involved with the company. Our executives, our board, our advisory board are all very, very seasoned people with extraordinary backgrounds and successes here to bring to Fusion and its future. About 25% of the company is actually owned by the insiders. Our family personally has over $10 million invested in the company. But it certainly speaks to the amount of confidence that our family, our board, our advisory board has actually in the business. So we've invested considerably, and well over $200 million has been invested overall in the company. So 25% is a fairly significant number. The company trades on the Nasdaq. Up until just recently, we've listed about 4 months ago. The ticker symbol is FSNN. So we've just recently. Now, as you take a look at the cloud, everyone talks about the cloud. It's something that has gained tremendous popularity here, especially over the last number of years. It's a $155 billion industry, and it's still growing at double digits. And the reason it is because it has tremendous value to the businesses that adopt the cloud. So to begin with, as you take a look at what I call the revolution of the cloud, I think generally the investment community underestimates the impact that the cloud is having on software and infrastructure delivery. Every single software company you're aware of, every single infrastructure company you're aware of, must come up with ways to deliver their services through the cloud, which changes the entire delivery mechanism. So rather than you as a customer or client having all of your infrastructure and your systems and your software on-premise, you're now moving it off-premise And the service provider now needs to manage the connection, the security, the storage. So it really changes the entire delivery mechanism of the service or infrastructure a company's providing. Every service that's needed in order to deliver that or make that migration is what we do. We enable software companies, infrastructure companies, and clients in every industry to move their software, to move their infrastructure into the cloud. And the advantages are pretty significant for the business. The first is it reduces CapEx. So as a company traditionally bought licenses and hardware, spent a lot of money up front, now it's on an operating basis. So you pay on a monthly recurring basis rather than upfront capital investment. The second is, think about the number of people that were required in an IT and technology group in businesses. It eliminates the vast majority of requirements there. So companies no longer have to build and maintain large IT staffs in order to maintain their technology. We deliver future-proof solutions. And so as you remember, buying a solution and realizing the solution has improved and you have to upgrade everything, well, we do all that for you. So companies no longer have to worry about continuing to stay ahead of the curve. That's our job. That's what we do. And in terms of market conditions changing, as market conditions change, again, we are in the business of delivering software and infrastructure through the cloud, so we are continuing to deliver new and innovative solutions to our clients on a daily basis. And it allows companies, of course, to focus on their core business. What does a healthcare company need to focus on their technology infrastructure? They should be focusing on their healthcare services or solutions. We focus on the technology infrastructure. So as you look at what makes us different, the first is, as I mentioned, we're a solutions provider, not a product company. So when we go into a business, we can solve their cloud solutions by delivering a broad array of services into the client. The second is we've got a nationwide network. As I mentioned, it's very, very important that we can actually deliver the physical connection. If you're looking to access the cloud, the one thing you need is a connection to the cloud. Can you believe that most of the companies that are delivering cloud services don't have their own network? They have to come to companies like ourselves in order to actually have the physical connection to the client that they're delivering services to. So we've got this nationwide, highly redundant, scalable network allowing us to connect to customers and deliver their services around the country. We have a proprietary platform, as I mentioned, allowing us to scale and customize our features and solutions depending on the different verticals that we have. And that's a big strategy moving forward for us, is really verticalizing our solutions. So our vertical approach is also very unique. Our ARPU is higher than normal, our churn is lower than normal. The amount of ownership that the insiders have and capital that's been invested from the insiders. And lastly, the team of people that we've assembled, board, advisory board, and management team, is very, very impressive, especially for a company our size. Now our strategy really breaks down into three different areas. The first is organic growth. As I mentioned, it's a $155 billion industry, still growing at double digits. We have a nationwide distribution network of close to 500 distributors selling our products and services. We have an inside sales team whose job it is to target the existing customers that we have and sell more geographies, meaning more locations, and more services into our existing clients. This is important not only for today, but also as we bring in new products and services, we have a team of people that can take those products and services and drive them through the existing base of customers. And as you'll see in a few minutes, we've got a very impressive list of customers, and as you take a look at their spend today, it's probably in excess of $3 or $4 billion of services that we could provide today. So that inside sales team is very, very important to drive organic growth. And then lastly, a direct sales effort. We are currently building that. That's our own internal salespeople that are targeting, again, middle market and larger businesses, particularly focusing on specific vertical markets. Which leads me to the next part of our strategy, and that is verticalization. Identifying certain markets, meaning industries, bringing in internal expertise, establishing strategic partnerships, and really targeting where specific industries and where their problems lie and where they're headed. So we can develop particular marketing materials and products and services to solve the problems that they're currently facing. So today we're concentrated on one of our largest verticals is healthcare, but we're actually developing strong verticals in the legal, education, and transportation area here in the next couple of months. So as you take a look outward, We have 11,000 customers, as I mentioned. Over time, we'll actually segment those customers by vertical and drive vertical solutions through the cloud into our existing customer base. And lastly, acquisitions. It's a very fragmented market. There are a lot of small businesses. As I look at the industry, you'll find the largest guys, the AT&Ts, the IBMs, the Oracles that are all delivering into the cloud. Then you'll have smaller businesses that have typically single product and single geographic focus, and we're in the middle. So we can deliver everything the larger guys can deliver with a customization and a hand-holding that you don't find with the larger businesses. Well, what we found is that lower level, lower tier, provides an enormous amount of acquisition opportunity. So we look for companies that, number one, are accretive. All of the businesses we buy will be accretive from day one. They'll be in the same business we're in, or they will provide us new products and services that our customers want that we don't have today. So we've already made 2 acquisitions here. In the last 18 months, we've raised approximately $75 million in capital and have acquired 2 cloud services businesses. We're looking to acquire 2 to 3 businesses a year. So we now have a platform enabling us to really integrate these companies, and that's a very important phrase for us, integration. So when we buy a business, we tightly integrate that business. They don't stand alone in a different market. They come in from day one as an integrated part of our business, and we integrate the systems over time. I think they speak for itself. Overall, in 2012, we purchased a $26.5 million cloud services company, was generating just shy of $5 million EBITDA. We bought it at less than 4 times. Now, 4 times EBITDA. The important thing about these businesses, they're monthly recurring and they're high margin. So when we buy these businesses, 90+% of the revenue is recurring in nature, churn rate is low, the margins are high. So they're very, very, very high value businesses. The second acquisition we made was December 31st of last year. We bought a business doing about $32.5 million of revenue. We bought that business for less than 5 times EBITDA, and again are on the way to integrate that business. Over 90% recurring revenue stream, over 60% gross margins, almost 7,000 customers added to the network and capabilities that we have. So this strategy of acquiring businesses at low multiples, integrating them into our overall network is something that we believe complements our organic growth very, very significantly. So as you look at the business services segment, which is all I'm talking here about the cloud, let me just really paint a picture for you, since we don't have that much time, of the type of services that we'll deliver through the cloud. And we'll take what we call cloud voice. So our cloud voice service, if everyone here remembers a traditional PBX or a traditional phone system, you used to have a phone that sat on your desk, and what I call the intelligence of the phone system that sat in a phone room somewhere. Your IT person used to move phones around, or you used to have to call somebody and hire them to come in and move those phones for you. Well, what we do is we actually provide the handset. Those handsets plug into the internet, and we actually provide all of the intelligence of that phone system through the internet. So now let's go back to the traditional phone system. God forbid your business does well. You have to change out your entire phone system. God forbid that you want to actually get a new feature or capability. You have to change out your whole phone system. So with the technology that we have today, we deliver these phones. They can scale up and scale down as a client needs. So if I get a call tomorrow from one of our clients saying, we just bought a business, we need 1,000 new phones added to our phone system, I can ship them out 1,000 phones, they plug them in, and they work. So it's really changing the dynamics of how technology is delivered. That same concept is the way that we deliver storage solutions, security solutions, unified communications, contact center. All of the technologies that we provide are provided through the cloud or through the internet, and actually allows our customers to gain greater features, greater capabilities without the traditional headache of the initial CapEx and maintaining and managing and upgrading these solutions on their own premise that they've been facing historically. So just clicking through here again, we have the cloud connectivity, which is an important point of the business. Cloud computing, that's an area where if you've got software on your premise, we actually have all of the infrastructure. Move that software onto our servers. Let us manage it. Let us maintain it. Let us upgrade it. All for a monthly recurring fee that you'd normally pay just for the support infrastructure for that particular business. Security is a big area for us as well. We partnered with Unisys to deliver a very, very unique security product. We believe that cloud security is something that is on the minds of every single business, and it's an area that we're really targeting to make sure that we have among the most compelling, innovative services here on the security side as well. Our carrier services, we have a network, as I mentioned, not only nationwide, but we also have a number of international carriers that allows us to send our traffic and our services at lower cost and at higher quality than most of our competition. This just lists some of the customers that we have here. As you take a look, at least here in New York, you'll look at some of the larger customers here. They range from the MTA, which is one of our largest actually customers, Greenberg Trarg, the Robert Smith Hotel, New York Life, Starwood, Blinds to Go, Resorts International. All of these businesses, as I mentioned again, the importance of the inside sales team. Imagine being able to call on all these customers. We have infinitesimal percentages of their business. If we just sell into our existing base, we've got an opportunity to dramatically grow our business. Our management team, I would suggest to everybody in here that if you want to invest in technology, the first thing you look at is the management team. The only thing I can guarantee you will happen is things will change and things will get difficult, and you need to, in the technology arena, you need to back a group of people that know how to capitalize on every situation that comes their way. So as you take a look quickly at our management team, my background, I started out as an investment banker at Merrill Lynch in their corporate finance department, doing debt, equity, and M&A transactions. I subsequently worked for Oxford Health Plans, who was a client of the firm, worked on the turnaround of that business. It was about a $4.5 billion business, ended up getting sold to United Healthcare for about $55 a share, and then went and joined a communication services company where we grew that business. We acquired 31 companies, $1.3 billion of revenue before it was sold to Avaya. All of the management team here at Fusion, you'll find a commonality across all of them. They've all had small company entrepreneurial experience. They've all had middle market leadership, so they know how to scale a business. They've all had distressed situation experience, and they've all had M&A experience. So I've done over 40 M&A transactions. My president was the CEO of close to $1 billion business, started and sold a number of companies, also has done over 60 M&A transactions. Jan Saro has been the president of a $400 million business. John Kaufman and Russell came with one of our initial acquisitions that we had done. So all of the team that we've actually assembled are very, very strong and proven executives here in the technology arena. Our board of directors actually chaired by Marvin Rosen, who's sitting right there. Marvin's a partner at Greenberg Trarg, and historically in the mid-90s was President Clinton's finance chairman. So he ran President Clinton's finance operations. Philip Turitz, formerly the head of a large chemical company. Larry Blum, formerly the vice chair of Florida's largest accounting firm until it was purchased by Markham. Alan Brumberger, managing director at Drexel Burnham. Mike Del Giudice was Mario Cuomo's chief of staff. Today, Andrew Cuomo's top advisor, and is actually the lead director of Con Edison and large in the energy private equity business. Paul O'Brien was the chairman and president of NYNEX New England Telephone, which was purchased by Verizon. Jack Rosen is the president of the American Jewish Congress. And Billy Rubin is the former former head of the the New York and New Jersey Port Authority here in New York and New Jersey. Our advisory board is chaired by John Sununu, Sr., former President Bush's chief of staff, 3-term governor of New Hampshire. In any case, I'm getting waved off, so we got a little late start here, but in any case, we've got a very, very strong group of people, very impressive. You've seen the financial overview, and as you take a look at the business here, we've gone from lost $8 million of EBITDA to $12 million EBITDA run rate positive this year, and so we're looking forward to an exciting time ahead. So as you look at the space we're in, the people we've assembled, the strategy we've got, the momentum we've created, we think we've got an amazing opportunity to build some true value at Fusion. So I appreciate the time, and I don't know if we have any time for questions, but I appreciate it. Thank you very much.